Thank you. Good afternoon, everyone, and welcome to Salasar Techno Engineering Limited's earnings conference call for the third quarter and 9 months ended 31st December 2018. I would like to begin by expressing my gratitude to all of you for taking the time to join us today. On the call with me is Mr. Pramod Kala, the Chief Financial Officer of the company, and Mr. Kamlesh Sharma, Vice President, Finance and Controls, and Bridge IR, our investor relation team. Before we get into the financial and business performance for the quarter and 9 months ended 31st December, I would like to start by giving you a short overview about the company. Our journey began in 2006 as a telecom tower manufacturer, and over the years we have successfully diversified our business into other verticals, expanding our operations into various parts of India. We have supplied more than 30,000 telecom towers since our inception of various designs to all leading telecom players and share a good business relationship with each of them. Our technical collaboration with Rambol, a Danish company, has enabled us to emerge as one of the key players in the manufacturing and fabrication of telecom towers. This collaboration has helped us provide our customers with better design and optimized towers. We are a preferred telecom tower supplier for all major telecom companies in India and enjoy a sizable share of the market. As on date, our total installed capacity of galvanizing stands at about 1 lakh metric tons per annum, and we offer steel fabrication and infrastructure solutions for telecom towers, transmission line towers, substation structures, solar module mounting structures. We also manufacture and provide utility poles to our customers for different uses such as high mast poles, lighting poles, smart city poles, stadium lighting poles, flag poles. I would also like to mention here that we are an approved vendor for Power Grid Corporation of India for various telecom or various transmission line projects. Our business can be classified into 4 verticals mainly. One is telecom towers, second is transmission, which can further be divided into EPC projects, turnkey projects, railway track electrification, and supply of railway track electrification structures to other EPC contractors, and similarly, transmission line structures to other EPC contractors. Third vertical is solar module mounting structures, and fourth is the poles, utility poles, which include lighting poles, high mast poles, smart city poles, stadium lighting poles, camouflage poles, and flag poles, etc. Further, as an ongoing endeavor to enrich our product mix, we have been awarded as an approved vendor from Central Organization for Railway Electrification, that is CORE, to supply railway track electrification structures to other EPC contractors. Our company is gearing up to sharpen its focus on railway electrification and intend to increase bidding for such projects. We have started building capacities and training our manpower to handle all related projects. The sector continues to witness uptick growth in both orders and execution, and the company expects growth to remain strong and gain further pace with increased participation opportunities. We have constantly innovated to provide efficient solutions. Our excellent execution capabilities have helped us gain the trust of our clients. This is evident from strong repeat orders from our clients. I'm happy to share with you all that our board of directors have approved the appointment of Mr. Pramod Kala as the Chief Financial Officer of the company in place of Mr. Kamlesh Sharma earlier. Mr. Pramod Kala is a qualified chartered accountant and has more than 23 years of rich experience in the field of finance, banking, accounts, and taxation and commercial operation. Mr. Kamlesh Sharma, our old CFO, has been reassigned the post of Vice President, Finance and Controls. Also, I'm happy to share that Salasar has been bestowed upon with 2 of the highest accolades at Indus Towers annual partner meet held last week at Gurgaon. It's important to mention here that Indus Towers is one of the largest tower company in the world outside China, having more than 120,000 towers at site with almost 2 lakh tenancies. This award from Indus Towers are something that we are very proud of. We have been awarded 2 awards. One is the Gold Award among the category of infrastructures, which is the highest award in the category of supplies of structures for building passive infrastructure, which includes ground-based towers, rooftop towers, monopoles, pole mounts, and other related structures for building tower sites. So we are the highest. We have been considered the best partner among the supply of infrastructure products. Second award is the Platinum Award, which is the Partner of the Year 2018-19. This is the highest and the most coveted award that Indus gives away to any partner among fraternity of almost 400 vendor partners among all categories. So Indus has considered Salasar as their Partner of the Year 2018-19, and this means that we have been chosen as the best one among 400 partners across all category of products what Indus buys, whether it is telecom, towers, or IT solutions, or services, or whatever. These awards give testimony to our company's determination to provide the best service to its customers. Customer satisfaction has always been our first and foremost goal. This year again, we are committed to meet our target of zero defects, always on-time delivery, and timely project execution at sites, and most ethical business practices. Coming to our consolidated financials for the quarter and 9 months ended 31st December 2018. These numbers are in line with India accounting standards and AS guidelines. Financial highlights for the third quarter. Our focus has been on improving overall business, and this can be seen in our performance. The company registered a revenue of 150.7 crores with a year-on-year growth of 15% from rupees 131 crores in the same quarter last year. The growth is driven on account of growth across telecom sector and transmission segments. We were expecting a slightly higher revenue in this quarter, but at the end of the quarter, some of the orders could not be invoiced to Reliance because they were taking inventories at their warehouses, and those products and services sales were booked in the month of January. The EBITDA was at 15.8 crores in Q3 FY19, increased by 7% as compared to over 14.7 crore in Q3 FY18, despite challenging scenario in raw material cost and other services. Expenses of rupees 1.7 crore incurred in quarter 3 FY19 are mainly on account of technical and consultancy fee, which has been paid to our joint venture company, which are pertaining to orders which are going to be executed in our next 18 months. The net profit for Q3 FY19 was at rupees 6.3 crores as compared to rupees 8.5 crore in Q3 FY18. This decline is mainly driven by the increase in finance cost as the working capital requirement have increased, and we have built inventory to execute orders in the upcoming numbers. The inventory levels were quite high at the end of Q3 FY19. The financial highlights for 9 months FY19. Our 9-month FY19 revenue stood at rupees 467.3 crore with a year-on-year growth of 34% compared to 347.7 crores in 9 months FY18. The growth has been on account of timely execution of orders across segments and also from supply of railway electrification structures that started from this year. Our EBITDA stood at rupees 50.1 crore, representing a growth of 32% as compared to rupees 38 crore in 9 months FY18. This is despite challenging raw material scenario and also higher capacity utilization. The profit after tax was at rupees 23.1 crore versus rupees 20.2 crores in 9 months FY18, representing a growth of 15%. Overall, we see good demand in the industry, and our focus remains on increasing our market share and providing quality product and services to our clients. This is all from my side as of now, and the floor is open for question and answers. I'm ready to take the questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who has a question may enter star and 1 at this time. The first question is from the line of Vaidik Sarkar from Unifi Capital. Please go ahead.
Hi, Shashank. Thanks for the opportunity. Help me understand the volumes you've booked in revenues in Q3, and if you can give the comparable numbers for Q1 and Q2 this year as well.
Yeah, Q1 we had booked a revenue of 164 crores. Hello, can you hear me?
I need the volumes, please. The volumes.
In terms of tonnage?
Yes.
Okay. In terms of tonnage, in Q1 it was 17,745 tons. Q2 was 15,446 tons. And in Q3 it is 14,272 tons.
Can the comparable numbers for the 3 quarters last year, FY18?
Just a minute. I'll just get those numbers and I'll get back to you on this for the tonnage. But in total, we have, in 9 months, we have achieved a tonnage of 47,463 tons versus a tonnage of tonnage. Which one? In Q1 last year, it was 11,249. Q2, it was 11,383. And Q3, it was 13,302 tons.
Sorry. Can you just come again with the number? I missed all the 3. Q1 was?
Q1 last year in 17 was 11,250.
Okay.
11,250.
Yeah.
And Q2 it was 11,384.
Mm-hmm.
And Q3 it was 13,302 tons. And in total for the year it was 35,000. For 9 months, it was 35,935 tons, which is 47,463 tons this year.
Sure, that's helpful. So, this one-off expenditure and technical cost that you were referring to, why is that a one-off, and what kind of tangible returns are we expecting from that line item?
See, Vaidik, what happens is when we go and bid for a project wherein we are not technically qualified, right? We tie up with a company who's got a past experience and they have a requisite qualification. So what we do is we do a joint venture with them and bid for a tender. And when we bid for a tender by joining hands with such company, we normally pay a fee to them, right? So we got 3 tenders like this. 2 are in Haryana to build substations. 1 is in Jharkhand. And also we got a project in Gujarat for building railway overhead electrification work, right? So revenues from these projects would start end of this year or starting from April, May onwards. These projects have to be executed over a period of 18 to 20 months and rather 24 months. And total project value is more than 165 crores. This is the revenue which is going to accrue to the Salasar of 165 crores.
Okay, and this will accrue over how many quarters?
This is going to be spread over I would say about 6 to 8 quarters. There will be some projects which will be completed over next 6 quarters. There will be some which is going to be executed over 8 quarters.
Okay. So just take us through your executable order book, apart from this, which is your telecom and your other power and EPC projects. What does your executable order book look like?
See, if we talk about telecom as of now, We have a pending order book of about 150 crores from Reliance alone. Okay?
Okay.
And other telecom operators, we have a visibility of about 70 to 80 crores over a period of next 3 to 6 months, I would say.
And the Geo 151 is over how many months?
This will be, 70 to 80 crores from other customer by end of Q1 next year.
Okay.
And 150 crores to be completed by us probably by mid of next quarter. That is Q1.
Okay.
Yeah. So I would say that we could be booking a revenue of about 200 crore plus in next 4 to 5 months.
Okay, so this is the telecom piece, and the non-telecom power railway slash...
Non-telecom, we have an order booking of wherein we are executing about roughly about 265 crores, wherein we have started working on 2 projects in Haryana, which are of 36.5 crores each. So let's say about 36.5 and 36.5, 73 crores, which we have already started working in Haryana. Then there is a project in Jharkhand, which is again a substation plus some line. It's about 52 crores, where the work has already started this quarter. I would say rather in the first week of January. And these revenues are going to be built over next 18 to 20 months. Apart from that, we are already working on a project in Himachal of 43 crores. Then PVNL, we have a pending order book, very old pending order book of 13 crores, wherein there is an issue of right-of-way. The department is yet to, give us the clearance on the path of the line. So that's why that issue is pending. Again, PVNL, we have a pending issue of 10.89 crores in reason. And other than that, we are doing that PVNL project, wherein we have to book a revenue of almost about 65 crores over next 3 to 4 months. So these are the numbers we are working on. Apart from that, there is a work in Gujarat which we have already started of about 89 crores, which is in Gujarat. That's again in a JV, wherein revenue booking to Salasar in that project would be to the tune of about 40 crores.
Okay, sounds good. And I'm just looking at the tax rate this quarter. It's come in exceptionally high at about 39%. What did we miss there?
Sorry? Can you come again with the question, please?
Sure. Your tax rate for this quarter has come in at about 39%. I'm just wondering what went into the provisioning there?
Just a minute. Okay. Just a minute. I think Pramod is with me. He's just going to look into this, why this percentage of tax has increased this quarter.
This is including deferred tax alone. It includes deferred tax also, not the income tax, deferred tax also.
It includes deferred tax as well. And that's, but probably I think we can work upon that and we can get back to you, not a problem.
Yeah, I know, but even accruing for deferred tax, I don't think the numbers, kind of behave this way. I think there must be something more to it. I'll take that offline, Shashank. Thank you.
Don't worry. We'll discuss that in detail, and we would answer that. We've taken that. Your question is on the percentage of tax. It's coming as 39%. You're saying. We'll work upon this and we'll get back to you offline.
Yeah, and just give me the total volume sold in Q4 also last year, if you have that handy, or even the total tonnage.
The tonnage for the Q4 last year. Yeah, I think we did close to some 53,000 tons last year. How much did we do? Just a minute.
Not really.
Q4 total. If I remember correctly, we did close to 52,000 tons last year in total. And this year we'll be doing something around close to 65 to 70,000 tons.
Okay.
About that, yeah.
Thank you, Shashank. I'll be in touch. Thank you.
Yes, yeah. Thank you.
Thank you. A reminder to the participants, to ask a question, please press star and 1. Next question is from the line of Ankit Merchant from SMC Global. Please go ahead.
Yeah. Hello, sir. Good afternoon.
Good afternoon.
Can you just help me out with your current debt to equity, and can you also share some light on your working capital? Yeah.
Debt to equity. See, we actually don't have any long-term debt. It's all working capital what we have.
Yes.
And working capital as on the end of this quarter, we had an exposure of about 140 crores, if I remember correctly.
Okay.
And debt to equity ratio is, if I just check how much is the debt to equity ratio.
It was 2.85.
I'll just check and, sorry. Debt to equity, 340 crores. And debt to equity?
Equity actually working capital है
we don't have any term loan as such.
Yeah.
So, but anyway, Mr. Pramod is working on this, and then probably we can give you the numbers as to how much is the debt to equity ratio.
Sure. And can you just also, highlight what are the, problems you have been facing with your working capital, and how going forward, how do you intend to work on it?
As such, there's no problem with respect to the working capital. I mean, if you look at the percentage cost of our finance cost with respect to the total revenues, for 9 months, it is 2.39%. Okay?
Yeah.
And if you compare our numbers in terms of finance cost with the other companies in the similar sector, their finance costs are much higher compared to what we are incurring. See, we could do little better if the telecom sector revenue increases more than the transmission, because in transmission, whenever you're doing EPC projects, the revenue, the working capital cycle increases. Whereas in telecom, it is much better because we are dealing with private players in telecom. And we know that the payments come within the committed timelines. Whereas when you're working as an EPC contractor with the government, sometimes the payments get delayed, plus there's a lot of issue with respect to the bank guarantees which you submitted. That also becomes a part of the working capital cycle. Because sometimes, suppose there is a project of 2 years, which we need to complete in 2 years, and the bank guarantee is going to be stuck for 3 years. That all adds up to the working capital. That's why, it looks like there is a strain on the working capital. But 2.39% of the total revenue as working capital is not something which is very high.
Yeah.
We are probably, much lower than compared to our peers, if you look at the numbers of other companies.
Okay. And can you also guide me with your CAPEX guidelines, if there are any, for the next year?
No, we are not planning for any CAPEX as such as of now. Nothing on the anvil at the moment. Yeah.
Okay. And any specific orders which you have been bidding for the next financial year? Any major?
See, we keep on bidding, projects. Right now our order book is almost 400 crores, and but we try and make our order book in such a way that we have the maximum share of telecom market in the sense so as to cover our manufacturing capacity plus the working capital mix. We keep on bidding other projects. There are projects of almost 300 crores which are in the pipeline which we have bidded, where the results would be out in maybe next 2 to 3 months.
Okay, and how many of them are from the telecom and and could
See,
also...
telecom you don't bid actually. Telecom is all private players, so there is no tender as such.
Okay.
Here the tenders what I'm talking about is all government tenders of transmission or railways. And with the telecom, as I said, we already have an order book of almost 150 crores pending to be executed for Reliance, and almost 70 to 80 crores with other operators in next 4 to 5 months.
Sure. And the billing for which will be done in next quarter 2 or quarter 3? Is that?
Yes. I mean, this almost 200 crores billing should be done in next 4 to 5 months.
Okay. Yeah, that's it from my side. Thank you.
Thank you.
Thank you very much. Next question is from the line of Ashutosh Garud from Avendus Wealth. Please go ahead.
Hello.
Yes,
Garud,
Ashutosh.
may we please request you to speak a bit loud? Your voice is very faint.
Can you hear me now?
Yes, much better. Please proceed.
Yeah. So I was trying to understand. Initially, you mentioned about some orders getting delayed on the Reliance front. So what kind of tonnage was that order? Or let's say if we would have done that order in this particular quarter, that is December ended, what kind of total tonnage we would have done instead of this 14,272 tons?
There could have been an increase of about 400 tons, 400 to 500 tons, giving us a revenue of almost 3 crores, so 3.5, 4 crores.
Okay.
Yeah.
So it was a smallish kind of a delay, you would say, not a...
Yeah, I mean, it's just that they were taking the inventory at their warehouses, and they kind of held up the dispatches for last week or 10 days, which started again in the month of January, first week of January. So those 500, 600 tons have already been dispatched. But, what happened was that our sales went down 3 to 4 crores, about 4 crores. And the inventory was built up, end of this quarter at our end.
Okay.
Which has been covered now.
Okay. And you also mentioned about the range of doing 65 to 70,000 for the full year. So if we consider on a lower range, for example, if we do, let's say, 65,000 tons for the full year, that constitutes to around 17,500 tons kind of a volume for Q4. And
about 18 to 19, about 18,000 tons,
So then again, that would be like more or less like a single-digit growth in Q4, right? If you compare your Q4 volumes last year and this year, then it would be, last year it was around 16,000, if I'm not wrong.
No, last year Q4 was about 13,000 tons, 13 or 15,000 tons. I don't have the numbers of those numbers readily in front of me.
For the 9 months you did 35,935 you mentioned?
Yeah, 935, about 36,000 tons.
Yeah, and for the full year you did 52,000, then it comes to...
I don't have the numbers, those 52,000 in front of me. Okay. Probably it was 52,000, I'm not sure. I'll have to check that number,
So assuming it is 52,000, then you did somewhere around 16,000 in last quarter.
Yeah, if it was 52,000, of course we did 16,000.
So my question is coming from the angle where in that case 18,000 kind of a volume for Q4 will give you a single digit kind of a growth rate in case of volume growth. So if you can share why is this kind of because we were growing at a much higher pace till last quarter. So if you can throw some light on why the volume growth has come down to these levels, are we utilizing the capacities at the full and we don't have
19, so it is around 20% growth.
See, from 16,000 tons to 19,000 tons is almost 18%, right?
Yeah, that is assuming we do on a slightly higher range. I'm talking on because you gave the range of 65 to 70,000. So I'm trying to...
so let's say even if you take 18,000, okay, from 16,000 to 18,000, it's about 14%.
Yeah, but then still we'll be operating at a much lower growth rate as compared to, let's say, what we saw in Q1, Q2. So,
but I'll have to check whether we did 52,000 last year or 48,000. I'll have to check. Okay. I don't have that number somehow in front of me.
Okay.
For the last year.
Okay. So if you can just take that number and let us
know. Sure. We'll check that number. How much was the total tonnage last year?
Yeah.
And this year we are sure that we are going to touch at least 18,000 tons of slightly more in Q4.
Okay. Great.
In terms of tonnage, yes.
And on the volume, on the EBITDA margin front, what is the outlook for the coming quarter, since we are already halfway through the quarter, and for the coming year, since we have some kind of order book already? So what is I would want to know the full year volume numbers as the Concall last year.
See, EBITDA margins more or less in the similar range, about 10.9.
Okay.
What we've been doing in our kind of industry. These are the kind of margins where we operate upon.
Okay.
Some of the projects, if we win at a higher margin, probably EBITDA margins could go up, wherein we have bidded for some projects. They might go up, but this is something that we would like to maintain minimum, about anything between 10.9 to 11%. And with respect to the tonnage growth next year, probably the volume growth could be looking at the numbers, looking at the order book, what we have in front of us. We could grow at least 10 to 12%, maybe 15% also in terms of tonnage alone.
Okay.
Yeah.
Okay. Thank you.
Thank you.
Thank you. Next question is from the line of Kalpesh Goti from Valentis Advisors. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon, Kalpesh.
Yeah, sir, in opening remarks, you told about, there is a increase in the working capital. Can you share some data? What's the inventory and data and paper?
See, I'll tell you, finance cost as a revenue as percentage of revenue is about 2.39%. Against a sales of 467 crores, we have incurred a cost of about 11 crores as finance cost, right? Whereas last year, for the whole year, it was 1.67%. But you must also consider the fact that last year we had the IPO money, which was utilized for working capital. That had kept the working capital much lower, right? But 2.5% finance cost is not something which is it should be of any reason to worry about, right?
So my question is totally different. I am asking for a working capital. Can you share the absolute amount and how much?
About 140 crores. 140 crores.
Can you break up the inventory and the debtors?
Inventory and the debtors, yes. Inventory was 119 crores.
Okay.
And debtors were 206 crores.
So debtors has increased from
151
almost same, right? Debtors are almost same.
Debtors, no. If you look at the March numbers, as on 31st March 2018, our debtors was 151 crores.
Okay.
Whereas now debtors have increased by 54 crores to 206 crores.
Right.
As on March 2018, our working capital was 89 crores. Whereas today, inventory was 89 crores, which is increased by 30 crores to 119 crores.
Right. So basically,
debtors have increased by 54 crores and the inventory is up by 50 crores. So almost 84 crores in terms of debtors and inventory.
Okay. So this mainly is because of your execution from transmission has gone up.
Yeah. See, the major outstanding, of course, is from the transmission sector. There are two projects of rural electrification which we are doing. The payments from those projects have been slightly not in line with what we were expecting. They're slightly slow. That's why the working capital requirement has gone up. But if you look at the inventory, we are almost 84 crores up in terms of inventory and debtors, whereas working capital has gone up by almost 50 crores.
So my question is, first, what was the reason behind the slow execution in the transmission?
No, there's no slow execution as such. It is just that these are government projects, and sometimes the payments from the government are delayed, which we have actually factored in at the time of bidding. That's why, our EBITDA margins are still more or less in line with what we have been predicting. I mean, please understand that, we have been able to maintain EBITDA of about 10.9%, irrespective of the fact that the payments from PVNL are delayed by almost 3 to 4 months, right? These things we had already factored in at the time of, taking those tenders, that the payments are going to be delayed and they're going to be a little effect on the working capital, eroding our margins in terms of working capital cost.
Yeah, but
that was factored in already.
Yeah, but you have factored in the working capital. But, as an analyst, we didn't factor that, drastic change in the working capital. That's what I'm asking, So, is it what you're seeing in future also, if the revenue from the transmission will go up, then our working capital keep going up and so the interest?
See, the internal target in front of us is that we don't expose ourselves beyond 30% of our revenues to the transmission sector. Okay? So even today, we have a mix of almost 61% is telecom, 29% is telecom, is transmission, which includes EPC also. So total EPC business where the working capital are stretched, we don't want to increase our exposure in that sector beyond 30% of the total revenues. Right?
So what's the unbilled revenue of the EPC transmission order book?
No, you're talking about the order book or the revenues as of now?
Unbilled revenue, order book.
Unbilled revenue today is about, as I said, it's about, numbers. We have, as I said, we have almost 165 crores, or almost 265 crores.
Okay.
Which are unbilled, which are going to be billed over a period of next 18 to 24 months.
Right. So apart from your transmission and telecom, how the other segment are doing?
See, the solar sector is not doing very well in India in the sense that, all the solar power plant developers, they are stretching themselves in terms of the rate of PPA they've signed with the government. And the solar sector has, taken a hit. We were doing close to 15% of our business in the solar sector, which is almost zero today.
Oh.
Because when your customer doesn't have money, it doesn't make any sense to, get into that sector. So we are doing the solar structures very selectively where our monies are safe and there's a little margin in the other thing. And the other segment is the poles, lighting poles, and flag mast and high mast, which is a good business that we have got into, which includes poles for transmission as well, and smart city poles. That sector is growing. We have a good contract signed with Bajaj Electricals for supplying poles to them on a regular basis, on a monthly basis.
Okay.
Wherein they have given us a visibility of continuous supply for next 6 to 8 months at least. And apart from, we are working on with other contractors as well who buy lighting poles from us on a regular basis. So that sector is picking up. Revenues from that sector would be in the range of maybe around 7 to 8% next year. This year it could be around 5 to 6%.
Okay. And how the working capital in the smart poles?
See, again, the whole sector is divided into different segments, right? One is smart poles, which we are working for telecom sector.
Oh.
So the working capital requirement is as in line with the telecom sector, right? And the lighting poles, which we do for smaller contractors, those are almost on a cash basis in the sense that they have to pay advance and they have to pay before delivery. So it's almost no strain on the working capital, right? And whereas now that we have signed a contract with Bajaj, they're going to pay in 45 days on a regular basis, but the volumes are high. So that will give us, more operational efficiencies and more tonnage, which will bring the cost down. And in transmission line monopoles, again, there's a payment of, we are supplying those poles to a contractor who's got a EPC contract with the government, wherein he's paying us in about 60 days' time.
Right. So coming to your interest cost, you said 140 crores is working capital debt, and we paid an interest of 4.78. So what is your cost of debt? It comes around 13.5%.
No, see, I think that includes a lot of charges also. See, there are a lot of bank guarantees which we have submitted to the government of almost 150 crores, wherein those charges for the bank guarantees also come. Opening charges plus the charges for the year, they're all part of finance costs.
Okay.
As such, our lending is only at about 9.5%, 9.5% from all the banks.
Okay. So what is the breakup of the bank charges and bank guarantee?
We can give you, I mean, Mr. Pramod has noted down this question.
Sure.
And we can separately give you the details of the bank charges and the bank guarantees details. Not an issue.
We'll get it offline, sir. Okay. Thank you.
No. Thank you.
Thank you. Next question is from the line of Chirag Dutt from PA Associates. Please go ahead.
Good afternoon, sir. First, congratulations for the award you received.
Thank you, Chirag.
Yes, sir. So, majorly my question is, any slowdown you see in quarter 4 and beyond in the pattern of spending by Vodafone Idea or other telecom players apart from Reliance? And how is the raw material prices affecting you regarding raw material, if you can give an outlook?
See, as far as the telecom sector is concerned, next 6 to 9 months are looking very exciting, more than whatever they were earlier in last 10 years.
Okay.
Reliance Jio, of course, is a big customer. If you would have read recently, Vodafone Idea, combined entity, are going to spend more than 20,000 crore rupees on creating new infrastructure, which would essentially mean new telecom sites plus upgradation of the existing sites. See, apart from the fact that the telecom sector in general is in a stress because of lower ARPUs, lower revenues per user, but they don't have a choice but to improve on the existing infrastructure, right? See, 4G connectivity even today is not very good. The data consumption is increasing multifold, right?
Okay.
And 5G is yet to come. First of all, the 4G sites have to be completed. The 4G connectivity has to be made in line with the international standards. And then 5G, with the advent of 5G, there might be work in next 2 to 3 years in telecom which has happened during last 25 years. There could be more work in next 3 years, 4 years in telecom sector than whatever has happened in last 25 years combined. So telecom sector is one of the most promising and interesting sectors from our perspective, in the sense that we are providers of passive infrastructure, wherein the telcos have to spend.
Yes.
The telcos have to spend on creating infrastructure just to stay afloat, in the sense that until they have a proper infrastructure, they will not be able to give the infrastructure on rent to the operators, and operators are going to struggle even further with the ARP. So they might have a challenge in terms of their revenues, but at the same time, they have to spend on the infrastructure. I've been saying this, and that has actually been, you've been seeing this all along during last year. Okay. And as far as the raw material prices are concerned, raw material prices, see, with most of the customers, we have a price variation clause. So raw material prices do affect us positively and negatively both ways. When there is a huge difference, right? When there is a lot of fluctuations. But mostly, with most of the customers, they are kind of a pass-through. So suppose, let's say in a particular case of Reliance Jio, whatever orders we get from them, they are on a firm basis, firm delivery, firm price basis. They give us orders for next 3 to 4 months, which we have to complete, or 5 months, with a firm price. Whereas other customers, we have a price variation clause wherein they review the price every month. So in case of Reliance, two things happen. Suppose you have taken an order at a present value and the prices of steel go down, it gives us extra margin. Whereas if the prices of steel or zinc go up, they affect our profitability slightly negatively. But that's a chance we take because the volumes with Reliance are high and it gives us operational efficiencies.
Okay. So, sir, what's your outlook for next year?
In telecom, as I said, next 6 to 9 months are very, very interesting. And probably, as I said, with the advent of 5G, probably there will be more work next 2 to 3 years than whatever has happened in the last 25 years collectively. So it's very exciting and very interesting for me.
Are we expecting to end this year with positive cash flows? And also, as on date, the receivable as percentage of sales, if you can provide that.
Receivables versus sales. We have receivables of about 206 crores, which we were just discussing, against a sales of 467 crores. So you can do the math. And in terms of positive cash flows, probably, our against a sales of 600 and let's say 35 to 40 crores, whatever we end the numbers with end of March, our debtors are going to be more or less 240 to 50 crores. I mean, in terms of percentage, probably it will decrease at the end of the quarter.
Okay. Thank you, sir.
Thank you.
Thank you very much. Before we take the next question, we would like to remind our participants that you may press star and 1 to ask a question. Next question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Yeah, Shashank, I just looked up the FY2018 volumes, and it looks like it's about 55,000 tons. So, I mean, if that's the base of 55,000 tons, then, I think your guidance for Q4 of this year, it looks like your volumes will actually degrow. So could you please clarify that quickly?
Last year was a 50. I'm not sure about the total number last year. As I said, I'll just check it and probably we can discuss again. But overall, we have achieved 47,500 tons as on December. And we're going to do at least 18 to 19,000 tons more. So it will be about anything between 65 to 66,000 tons. Whereas last year, if I remember correctly, it was close to 48,000 or 50,000 tons. I'm not sure I'll get that number. 9 months number I have about 35,000 tons, right?
Yeah.
See, if we did 35,000 tons in last 9 months of last year, probably we would have done 15,000 tons more. Like we had been 13,000 tons, 11,000 tons, and last quarter probably we would have done 15,000 tons. So from a 50 to 51,000 tons to 65, 66,000 tons is the volume growth.
Okay, sure. Your EBITDA per ton over the last 5-6 quarters have been on an increasing trend, but I see, some kind of volatility in your gross margins. So are we to understand that in FY18, which was a very strong year, you benefited from lower inventory prices and that's boosted up your earnings? Is that a right assumption?
There were two reasons probably, Vedic. One was that the working capital cost was lower.
No, I'm talking about your EBITDA, so that's pre-working capital.
EBITDA, okay. EBITDA. So EBITDA probably last year we were benefited from the slightly lower raw material prices, which affected slightly, negatively these products this year.
Okay, fine, sure. Thank you.
Yeah.
Thank you. We would like to remind our participants that you may press star and 1 to ask a question.
Hello.
As there are no further questions, I now hand the conference over to Mr. Agarwal for closing remarks. Over to you, sir.
Thank you. And I would like to thank once again all the people on the call for taking out your time and showing your interest in the company. We have slightly negative PAT this quarter, but as such, the EBITDA margins are healthy, and everything is very much positive looking forward. And we have good order books, as I mentioned, and we are in really very interesting times. With these remarks, I would like to close. Thank you.
Thank you very much, members of management.